What if a small biotech company working on cancer treatment becomes highly valuable over the next few years, but only for investors who understand the risks and stay patient? Today, we are looking at ImmunityBio, ticker IBRX, and whether long-term investors should consider buying it now for a 3 to 5 year horizon. This is not hype. This is a realistic outlook based on growth potential, financial reality, and risk. Let's begin with where the stock stands today. IBRX has shown sharp volatility, moving aggressively between spikes and pullbacks. This is typical behavior for biotech companies transitioning from research stage to commercial stage. The current valuation reflects future expectations rather than current profitability. Investors are not buying what the company earns today. They are buying what it could earn tomorrow. And that is where both opportunity and danger exist. Now let's talk about the core growth driver. ImmunityBio is focused on cancer immunotherapy. Therapies designed to help the immune system fight cancer more effectively. Its flagship therapy, ImmunityBio, has received regulatory progress for bladder cancer treatment, which is a major milestone. Why does this matter financially? Because bladder cancer treatment is a multi-billion-dollar global market. If adoption grows steadily, ImmunityBio could become a recurring revenue generator rather than a one-time medical breakthrough. However, approval alone does not guarantee revenue. Doctors must adopt it. Hospitals must stock it. Insurance systems must reimburse it. Patients must respond positively. These real-world factors determine commercial success. Now let's look at potential revenue trajectory. If adoption is slow, revenue growth may remain limited and the stock could stay volatile. If adoption accelerates across the United States and later international markets, revenues could grow significantly between 2026 and 2028. This is why analysts describe IBRX as a binary-style investment. Slow adoption leads to stagnation. Strong adoption leads to exponential growth. Next is manufacturing and scalability. The company has invested heavily in production capabilities to meet potential demand. This is positive because many biotech firms struggle to scale after approval. However, scaling increases operational costs in the short term. Profitability may take time. Investors expecting immediate profits may become impatient. Long-term investors understand this phase is part of biotech growth cycles. Now let's discuss financial risk. ImmunityBio is still burning cash as it expands operations and research. This introduces several investor risks: possible share dilution, additional fundraising, continued operating losses in the near term. These factors can temporarily pressure stock price. This is normal in emerging biotech companies, but must be considered before investing. Now let's talk about price outlook and scenarios. In a conservative scenario, if adoption grows slowly and expenses remain high, the stock may trade sideways with periodic volatility. In a moderate growth scenario, steady adoption and revenue expansion could push the stock into a sustained upward trend over the next 3 to 5 years. In a high growth scenario, strong adoption, additional approvals, and pipeline success could significantly multiply valuation. However, biotech investing always includes downside risk, clinical setbacks, slower adoption, funding needs, or competitive therapies could negatively affect price. Now let's compare risk versus reward. High-risk factors include commercial adoption uncertainty, cash burn and dilution risk, biotech volatility, market sentiment swings. Potential reward drivers include first-mover advantage in immunotherapy, large cancer treatment market, future pipeline expansion, global approvals, and partnerships. This combination is why some investors see IBRX as a high-risk, high-reward opportunity. So should long-term investors buy now? For short-term traders seeking quick gains, this stock may feel unpredictable. For long-term investors who understand biotech cycles and can tolerate volatility, gradual accumulation during dips may offer better positioning. Patience is critical. Biotech success is rarely immediate. Here is the key insight many investors overlook. The biggest gains in biotech rarely happen at approval. They happen when real-world adoption proves the treatment works at scale. That phase is still unfolding. This means the story is not finished. It is just beginning. Balanced opinion. IBRX is not a safe stock. It is not a guaranteed winner. But for investors building a diversified portfolio and willing to hold through volatility, it represents a speculative growth opportunity with meaningful upside over a 3 to 5 year horizon. Position sizing and risk management are essential. Never invest money you cannot afford to keep invested through volatility. Because in biotech investing, the real winners are not always the fastest investors, but the ones who stay when uncertainty is highest. 1.